Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is 11:30 a.m. Eastern Time on Friday, February 21. And as you can see, the broad market is off about half a percentage point. But we did hit a fresh high earlier in the week in both the NASDAQ and the S&P 500. So tough to be too critical when we're down, marginally over the last 2 days. Now it is earnings season still. Shortened holiday trading week this week. From the earnings reports that I've seen, generally it seems like growth is decent, margin expansion is good, but a lot of companies are giving relatively conservative guidance for the first quarter and full year 2025. And in a lot of situations, both among the companies I'm following and others that I'm just kind of watching out there out of interest, it seems a lot of stocks are pulling back much more than you would have thought based on reports and guidance that are more or less just fine. So that's something that's kind of ruminating in the back of my mind. It seems like the market is a little bit on edge. We're also seeing some fading retail momentum, and specific to today is options expiration. So hopefully things will settle out a little bit more next week. On the other hand, busy week for the Fed, not a lot new. One of the fellows was talking about January PCE maybe not be as sobering as recent CPI reports. That PCE report is, of course, what the Fed prefers to watch for inflation, and that report is out next Friday, February 28th. A number of Fed governors spoke over the last couple of days, messaging pretty consistent in terms of not being in any rush to cut rates, still acknowledging that policy remains restrictive. I checked this morning, current market odds are still favoring a cut in either June or July, but it's not like an overwhelming 80% probability. It's still just like a slight over 50% probability. So I wouldn't count on that. I do think on a positive note, the market is becoming a little bit more focused on commentary around slowing or ending the Fed's quantitative tightening program that typically has the effect of lowering interest rates. So keep an ear out for that. I know it's not the most exciting thing to listen to or read about, but QT ending or slowing down generally good for the market and for lowering interest rates. And you can see that right here in the chart of the 10-year yield, which has come down over the last 3 days. Of course, there is also a ton of noise out there out of Washington surrounding tariffs, taxes, geopolitics, all kinds of things. Just a few of the things floated this week. Idea of tariffs on lumber. There's been some conflicting messaging on Medicaid cuts. Talk about this Doge savings, if it materializes, some of it being sent back to Americans through a Doge dividend, or maybe paying down the federal debt. There was this order to slash 8% from the defense budget annually over the next 5 years. Potentially a goal to abolish the IRS. And then on March 14th, we have a pending government shutdown. So there was a lot going on. Of course, some of that positive for getting the federal debt under control, but a lot of it very, very disruptive. And whether the end result is good or not, a bit disruptive in the short term. And I think the market is going to possibly be more focused on this kind of thing as we get out of earnings season and we're all not so distracted by earnings reports. So that is something to keep in mind. Of course, it hasn't been all, anxiety and stocks dropping this week. There have been a lot of companies that have done very well and their stocks have done well also. So we're going to go through a number of those names right now. First up here is SharkNinja. I've talked about this company before, about a $15 billion market cap. It is a small appliance maker. It makes a lot of really interesting products. They're coming out with a new grill this year, which I just checked out, and that's kind of neat. They have a small smoker, which is also kind of cool. Now, the company reported and the stock was up and down significantly. This was last week, but it's more or less flat since then. And again, I know that this isn't, a stock that you say, great earnings report, I'm going to go out and buy it right now, but relatively resilient since. And based on the details of the earnings report, which I won't get into, I think that this could be a pretty good year where the actual reported results are going to be significantly better than management guidance. So keep an eye on SharkNinja. Next up here is Amplitude. It's a small cap software stock, market cap of about 1.7 billion, and they had both a revenue and earnings beat. Talked about new customer growth in the enterprise, and they got a number of upgrades from analysts. As you can see, the stock did well, off a little bit today, but keep an eye on this one for possibly some follow through. Next up here is Clearwater Analytics, doing well both yesterday and following through today. A mid-cap financial software company, market cap of 7.8 billion. They beat on both the top and bottom line, and guidance for the first quarter and full year of 2025 are both ahead of street expectations. They're also completing a significant acquisition of Infusion, which was a smaller competitor. All right, Celsius Holdings, CELH. This is the high-profile beverage manufacturer. You'll see their cans being drank by a lot of younger people. They came out with earnings earlier in the week. The stock did well moving into that report, but it's up almost 30% today on news that they're going to acquire their competitor, Alani Nu. So that is Celsius Holdings. I don't have a prediction here, but I think that a significant merger or acquisition of this size can often lead to a lot more interest and an upward momentum in the stock. Just, the combination of two companies that can be aligned and doing both what they should do to grow individually and not having to focus on trying to beat each other up. So that is Celsius. All right, FIVN, another software company, market cap of 3.3 billion. What jumped out at me here is the report drove the stock up to a significant, intraday, multi-month high, but also that it's moving it above this overhead resistance potentially in the $44 range. So keep an eye on FIVN. Some of the takeaways from the report. Management talked about AI tailwinds as well as momentum with larger deals. All right, Primo Brands. I talked about some of the dynamics of a beverage company merger or major acquisition. So Primo Brands is in the water business. They have been for some time. They merged with one of their large competitors, Blue Triton, last year, and the stock has been doing very, very well since then. Pretty steady. They reported 2 days ago, and again, it wasn't like the stock surged on the earnings report, but it is steady. It's up today, and I think in this environment, you look at a chart like this from a company selling water, pretty stable business, and I think it looks pretty darn attractive. So that's Primo Brands. All right, iRhythm Technologies, IRTC is the symbol. 3.8 billion market cap. It's a med tech company. I'm not going to go into the details of the report, but as you can see, the stock is up nicely today, and it was doing well going into the report. So there's clearly some momentum here. Booking Holdings, obviously a large company, 174 billion market cap. Called this one out because it was interesting to see how Airbnb did. Their report spurred a pretty decent reaction in that stock. And then here we have Booking Holdings doing the same thing. BKNG. And last but not least is Unity Software, ticker symbol U. Market cap of 11.6 billion. Decent reaction yesterday. Stock was up, 30%. And looking to close above the December high of about 29. And we'll see if it can happen. But again, there's a lot going on in the report that is worth digging into if you're interested in it. I can't get into all that today, but this is Unity Software, and I think it's worth taking another look at. All right, guys, that is it for me. I hope you have a nice long weekend, even though it's only 2 days. And we'll be back in touch again next week. All right, take care.